As we all know, one of the restrictions for plus and prime flats is that the future resale buyers will be subjected to an income ceiling of $14,000 per month. I don't know whether HDB has their own calculation or they are just simply keeping the ceiling the same as if the applicants were to apply for a BTO. But it got me thinking, so what is the maximum resale flat price of a household that has such income? Is it really enough to prevent more million-dollar resale flats from popping up in the future? In order to answer that, let's do a rough calculation to estimate what maximum price can the buyers afford. But before we proceed, note that I'm just some random stranger with very limited knowledge, so don't take this simulation seriously and we are just having fun. Let's start with some key assumptions. So I am assuming that the total household income for this couple is $14,000 and not significantly less than that. The applicants are a Singaporean couple between the age of 30 to 40. Both are working and have been saving up with simple lifestyle. When I say simple, I am assuming that this couple takes public transportation and only eats out occasionally. I'm also assuming that they are coming from a middle-class background, so no inheritance money from their parents. In terms of lease remaining, I'm assuming that the couple is going to buy a resale flat that is around 10 to 15 years of age. Why is this important? Because if the remaining lease of the flat cannot cover the youngest applicant to age of 95, the loan amount may be prorated, reducing the maximum affordable price. So I'm assuming the flat age is about 10 to 15 years of age. Now, regarding loan type, I'm assuming that they will be taking HDB housing loan. While bank loans offer longer tenures, for example, up to 30 years for HDB resale flat, HDB loans generally have a more stable interest rate and a slightly lower down payment requirement, which is 20% versus it will take about 25% if you borrow from banks. We will assume an HDB loan for simplicity, and because like most couple would use it to purchase HDB anyway. For the interest rate, we are just going to use the current rate, which is 2.6% per annum, and we'll use this rate for calculation. Regarding the loan tenure, the maximum loan tenure for an HDB loan is 25 years or 65 years minus the average age of the applicants or the remaining lease of the flat minus 20 years, whichever is shortest. We will assume a maximum of 25 years tenure and that the youngest applicant's age allows for this. Now let's talk about mortgage servicing ratio or MSR. For HDB flats, the MSR is capped at 30% of the gross monthly income. This means their monthly mortgage repayment cannot exceed 30% of $14,000. For down payment and CPF usage, so HDB requires a down payment of 20% of the flat purchase price or valuation, whichever is lower. This can be paid using a combination of cash and CPF ordinary account savings. We will assume they utilize their CPF OA fully for the down payment and subsequent monthly repayments. Now let's talk about grants. So I'm assuming that this is a first-timer Singapore citizens couple and are eligible for CPF housing grants for resale flats. With an income of $14,000, they might be eligible for CPF housing grant families and the enhanced CPF housing grant EHG. The actual amount depends on the flat type and specific income tier. So, for example, for a 4-room or smaller flat, the CPF housing grant families can be up to $80,000. For a 5-room or bigger flats, the CPF housing grant families can be up to $50,000. The enhanced CPF housing grant or EHG, so the amount varies based on income. For a combined income of $14,000, they would receive a prorated EHG amount. For simplicity, let's assume a moderate EHG amount as the full $120,000 is for incomes of $9,000 or less. Let's estimate $40,000 for EHG for an income of $14,000 as the grant is tiered. Now, regarding proximity housing grant, as you know, this is an additional grant up to $30,000 if living with or near parents or married child. We will exclude this from the base calculation because it is not universally applicable. We are also going to assume that the couple do not have any other loans or debts. So this is just to simplify the calculation lah. I will assume that they have no other significant monthly debt obligations such as car loans, personal loans, credit card debts, etc. Why? Because this would impact their total debt servicing ratio or TDSR, which is capped at 55% for all debt obligations. For HDB loans, MSR is typically the more restrictive factor. I'm also going to assume a zero cash over valuation because, as you know, the HDB loan amount is based on the lower of the resale price or the HDB valuation. I'm just going to assume that the purchase price is close to or equal to the HDB valuation and there is no cash over valuation at all. Okay, now let's start calculating. First of all, let's calculate the maximum monthly mortgage repayment or MSR. So it's 30% of gross monthly income. So this is the number as you can see here. And next, let's calculate the maximum loan amount. Using an online mortgage calculator or a financial formula, you can estimate the loan quantum based on the monthly repayment, the interest rate, and also how long is the loan tenure. So based on this calculation, it seems like the maximum loan amount is approximately $1,040,000. Now, let's estimate the amount of grant that this couple could get. Let's say from CPF housing grant families, assume the couple got $50,000 for a larger flat scenario. And then for the enhanced CPF housing grant, let's say they managed to get $40,000. Again, this is just an estimate because the exact amount will depend on income tier and other factors. So if we total the numbers, then the total estimated grants would be roughly $90,000. Now let's talk about the loan to value or LTV ratio. For HDB loans, the LTV limit is generally 75% of the lower of the resale price or valuation. This means the maximum loan that they can take is 75% of the property value. Since the maximum loan amount is $1,040,000 and the LTV is 75%, the maximum property price based on the loan component would be this amount. Now, we also need to talk about cash and CPF down payment. So, the remaining 25% of the property price must be covered by the buyer's own cash and CPF OA savings minus any grants received. So, the down payment required is 25% times the maximum affordable price, and the amount to be paid from own CPF OA or cash would be down payment required minus the total grants. So you would end up to see this number as the down payment required. Now we also need to consider other costs such as buyer's stamp duty, legal fees, renovation costs, agent fees if any, etc. And we are assuming that the couple will pay all of these other costs out of pocket. Now, you might be wondering whether it's realistic or not for the couple to have this much money for the down payment. Well, yeah. That's why, as part of my assumption, the couple's age is between 30 to 40, so they should have some working experiences and not just fresh graduates. According to several online sources, in Singapore, you should have total savings around these numbers for your age bracket. So in summary, based on this exercise, a household with a combined income of $14,000 per month in theory can potentially afford a resale HDB flat up to this amount, which is around $1.38 million to $1.4 million. While they might be eligible for this amount, again, it's always wise for buyers to consider their comfort level with monthly repayments and other financial goals before committing to the maximum possible loan. Therefore, while $1.4 million seems like a high theoretical ceiling based on MSR and LTV, the practical affordability will also depend on their available cash, CPF balances, and the specific HDB flat that they are interested in. It is highly recommended that they apply for an HDB flat eligibility letter, which will provide a precise assessment of their eligibility for grants and HDB housing loans. So it seems like even with $14,000 income ceiling per month, it's still very much possible to buy a resale flat above $1 million. But looking at the numbers, I don't think most households will be able to afford a resale flat if it already goes beyond $2 million unless they are cash rich from parent support, winning lottery or something like that. I think what would be interesting to know is that if one day the income ceiling for BTO is updated to a higher amount, will the resale buyer income ceiling also increase? We'll see how it goes. Let me know what you think in the comment section down below. To get exclusive contents and support my work, click the join button to be part of the online family. Your support means a lot to keep us independent. Don't forget to join the membership and I'll see you on my next video. Bye bye!